What up, investors? What up, traders? Ken here from the Dyslexic Investor, and holy moly, guacamole, we are limit down once again. I think this is like the seventh and eighth time in the last week and a half. This is again Sunday evening. The overall future markets opened up at 6 Eastern Standard Time, and of course we're limit down within the first couple minutes. I believe seconds. We can look at the exact time frame. Basically, limit down. They sold off so fast. They're down 5%, and then they just turn off the breaker in the sense of just stopping trading. With a full on, just like no one can buy or sell. This is all due to the COVID-19, the overall stimulus bill that needs to be passed here in the United States to relieve small businesses, families living paycheck to paycheck, and basically just kind of help us save our economy. Crude has hit rock bottom. We'll look at a crude chart as well. We're looking at, oh, come on, no thank you, CNBC. We're looking at the overall stimulus package. They're saying $2 trillion. I've actually heard and read $4 trillion that you can see over here. And this would go from everything from bailouts to companies to families getting a check in the mail, being able to withstand the hardship of what's to come the next couple weeks due to being laid off, or just to kind of hold them over until the economy gets completely stimulated once again. And we're going to look at the charts here in a second. And we'll go ahead and actually let's just do that right now. We'll go switch to the charts right now. I'll be right back. All right, so now we're looking at the overall charts here on the S&P 500. Still trying to get a better understanding what the heck is going on here. As you can see here, we basically opened up 6 p.m. again Eastern Standard Time and completely sold off at 5%. Holding strong again. This is the limit down. Not seeing any ask or bid movement here. That is due to the limit down breaker. Then we also can see we just touched the oversold on the RSI on the weekly chart. This is 20 years of S&P 500 futures, and we just hit the very bottom here. We did that initially in 08 of October of 08 here. What I am projecting, or what I'm seeing, is we might not be able to completely call a bottom yet until we see this line over here turn blue on the oversold on the monthly chart. And it's hard to indicate where that could be, but it could be probably around the 2036 level, potentially maybe 15 or 20 bucks more. Basically hitting around that would be probably 50%, and so we're currently about 38% completely sold off from the tippy top. So we can actually just look at that real fast, and it's covered up. Wonderful. Let's go here to here. It's only 35 it's showing, so 35%, that's still a substantial amount. So we could fall another 15 to 10% to indicate a complete oversold cycle within the RSI and basically shake out any weak hands. This is on the heels of the potential stimulus plan that the U.S. government is putting out to all businesses, family households, and bailouts for a lot of other companies, and more importantly, a lot of the individuals which are not going to be able to make payroll come April 1st due to, I think they're guesstimating 2.5 to 2.7 million new job losses just in the last 2 weeks. And that report comes out, I believe, next week as well, on showing the overall unemployment line jobs claims, which is going to be a key indicator and potentially could sell us off more, all depending on if the guys on Capitol Hill can get their stuff together and figure out a plan and kind of stop this bleeding from happening. Not even bleeding, it's just a gushing wound that hit an artery. So I wanted to kind of break it down. So we completely broke any resistance that we had the previous week, because again, it's basically making an all-time low. And once it makes an all-time low, as you can see here, why is this not okay? Oh shoot, hang on. Want to do this. There you go here. It's actually to be okay. So okay, still 35. So we basically gap down. So gap downs are never very good. A gap down on anything you can kind of see here in 0809. We did gap down quite a few times, but nothing like this. This is a pretty huge indicator here. Again, this is only the beginning of the week, but this is kind of a huge jump. We could rally from here again due to the stimulus package. Of course, if we wanted to rally, we needed to break the 2600 level. But again, my initial price target, depending on how bad it gets, is the 2036. So that is basically, yeah, exactly another 10% where we're at right now. And that's what I could see going back to the monthly chart, that this indicator is turning blue. And that's when I want to slide in all my poker chips into the middle of the table, and just betting, making the risk of these are longer term bets on things will turn around, but things look completely disastrous and completely terrible right now. Some great investors have always said, when there's blood in the streets, you should be buying. When there's panic, you should be buying, not selling. So it's just kind of the same mentality. I'm kind of taking a much longer time frame. I'm telling that this is going to be hard to time with options. Like, I wish I still had my puts, but I don't. I sold them because it's just, the market's just been crazy. Like, I've never dealt anything like this before. I wasn't trading in 0809. The worst I've had was the 18 correction in February, then the 18 correction 18 correction in February, and then the 18 in December, and that's basically it. And then we had the 15, 16, which was kind of blah and kind of traded sideways. But this has been a completely downturn and absolutely terrible for a lot of people, and this is going to impact so many individuals. And I just hope that we can get through this all together fairly quickly and just get back on the road here, build a nice base, and continue to generate and create new opportunities here. Guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.